Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Wednesday the 23rd of February. Now markets are fairly settled this morning. There has been a swathe of sanctions that the Western allies have put upon Russia following on from President Putin's speech on Monday. However, there hasn't been too significant a reaction through major markets. There's been fairly settled, bit of consolidation through Forex, through equities. Equities which were again lower yesterday but fairly settled this morning. Just a few signs, interestingly enough, of these commodity prices just stalling and maybe setting up for potential corrective moves. But we will be obviously intent on seeing how markets continue to respond to the back and forth of geopolitical news surrounding this issue. But just for now, it's a little bit settled this morning. And we'll wait to see what happens. But we have had a rate hike from the Reserve Bank of New Zealand, and a hawkish one at that. 25 basis points, but certainly the promise of more, and increasing the potential top rate of interest rates further down the line in June 23 was an interesting move as well. So the Kiwis benefited on the back of that. Also, the Aussie is higher as well this morning. So the charts I'm looking out for today, well, we're looking out for how the Aussie is responding to this RBNZ decision, because we looked at the Kiwi on Monday. Now we're looking at how the Aussie is also coming higher, and we'll see how that is affecting the outlook for the Aussie, but also looking at how the oil price is starting to show a few signs of maybe topping out, but not yet decisively. But we'll see how the technicals are developing there, and also looking out for the rally that we've had in the last 2 days on FTSE 100. Is it at a crucial level? I think it is. So let's have a look at what these charts are doing. And onto the Infinox MT5 platform, and we can see here that the RBNZ decision has induced a breakout of that Kiwi dollar move. But I wanted to focus on the Australian dollar today, because what we have also seen is this Aussie dollar rallying in the last few weeks, and it is starting to move higher once more. If you zoom in one more level, you can see that it's been sort of pressuring this resistance around 72.30 to 72.50 in recent days, and it's now starting to really have a go at this. And you can see through the relative strength index, the RSI momentum, it is actually moving to new multi-month highs on that. So it suggests strengthening momentum in that move. Obviously, we've had two strong bullish candle yesterday and a bullish candle developing today. So move above 72.50 really does then put the pressure right on this 72.70 to 73.15 area of resistance. And it looks like this one is developing into what could now start to be a test of this long-term downtrend that is still in place. Obviously, at the moment, it's still a recovery within that downtrend, but the momentum of this move is developing. It looks like this is coming into a test of that key resistance area now, the 72.70 to 73.15 on the Aussie there. Oil chart is interesting because what we have seen is this rally higher in the last 8 weeks. Now, time and time again, I've actually had to change this uptrend. I've had to shallow it out because it continues to be breached, continues to hold into old breakout levels, but it's really is sort of testing and continually sort of falling over this this uptrend. Now, what we have also got is this, what I wanted to talk about today, this negative divergence, 2 lower highs on the RSI. Bearing in mind the market has been pushing higher highs on the price, we're seeing lower highs on the RSI. Also, this latest one underneath 70, which tells me that momentum is falling over. It's starting to wane, and this uptrend is still in play. The run higher is still in place, and it's still pushing towards $100. However, this falling over of the trend not only the trend but also the momentum gives me an impression that this is not as strong a market as it could be. So this still suggests to me that there are going to be tests lower, and the market is not in such a strong uptrend as it was previously. Finally, FTSE 100. What we saw the other day was this head and shoulders top pattern completed. That was on Monday. Now we saw a pullback into the neckline of this top pattern, which is around about 74.85, 75.20 area, and in the last 2 days that area has been a basis of resistance. It's fallen over, and it's again seemingly around that level today. And look at this RSI, which when it broke the Head and Shoulders top is now below 50 and is still below 50. So this is a really important near-term level. If it can start to close back above 72.50 and then start to pull higher highs, because obviously what we've seen in the last 1, 2, 3, 4, 5 sessions is a succession of lower daily highs on these candlesticks. So again, they're still in this corrective phase, but if the market can start to break through this resistance of the neckline and then start to form higher highs, the resistance of yesterday's high is 75.27, then we can start to see a turnaround in this corrective sentiment on equity markets, I think. So thanks for watching this video. I hope you found it informative for your trading. I will be back on Friday. We'll be looking at a little bit of US inflation with the core PCE, and we'll see how markets are rounding off another trading week. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much, everyone.